I'll probably say a few things that are probably similar to what Richard said in regards to WAF. We're actually about 10 kilometres from WAF, so we're watching it with interest, and we're in the same area, so a lot of the stuff will likely repeat that. Forward-looking statements, we all know what they are. So really, we're located in a, as I say, Burkina Faso. It is a very active gold producing and development area, 13 producing gold mines. Again, I would echo what Richard said there in regards to the quality of people. We have a lot of local, highly experienced guys, and it's a testament to the level of training and education in the country. We're obviously permitted. We're going through to development, and all of our economics were done at $1,300 gold. In fact, all our reserves were done at under $1,200. It's staged, so we're looking at building it the way we can build it so that we don't blow ourselves apart in terms of trying to raise the capital. So we build the oxide first, and then we follow with the sulfide in year 2, starting in year 3, and we build it out of cash flow. We all talk about a strong management team, but we have a lot of experience internationally and in Africa. We have built and financed a lot of mines in the area, so we have a pretty good idea how to do this. And our community, and similar to what Richard said, the CSR programs there are fantastic. It's a pleasure to do business in the country and actually add to the value of people's living, etc. Because you are mining in their country, you are disturbing them, and it's important to do those sort of things. We have a fairly concentrated shareholder base, including management, to which owns 6%, and RCF, who own 19.9% and recently participated in our financing to continue that 19.9% holding. I won't go through this too much. Burkina, as we know, is in that West African Birimian belt. 13 mines in production. WAF is the 14th going into construction. We'll be producing this year, and then we'll be the 15th. So, strong development and operational history in the country. Burkina obviously does and has had a lot of bad or disturbing news, mainly around the north and east border areas. It has, obviously affected some things, but not where we are. And I've been there 8 times in the past year, and I have not noticed anything different in regards to how we go about our business. And we're 90 minutes from the capital on a paved highway, a great infrastructure, so security, logistics, everything in place. And that's sort of where we are. I don't know if I've got a pointer here, but there is a paved highway right out to site. I think Richard mentioned in his presentation that there is a major army training logistics center there right beside us. In fact, our exploration tenements are cut off by that. So in terms of security, etc., it's in an ideal location. And what we've seen here, Mali, obviously excellent investment, Burkina investment. But what's really important to note, and I think it's one of the things that has attracted us to it, has attracted RCF and a number of our key shareholders here, is unlike a lot of other jurisdictions, and I will name Canada in that, you can name mines here that were permitted on time, were built on budget, that started up on time, and actually produced free cash flow to the shareholders. I was quoted in the paper recently as being questioned about risk, and I said, well, if somebody in the room could name me 5 operations in Canada that have been built on budget, started as per the plan, produced as per the plan, and didn't go back to the shareholders looking for more money, I don't know one, but I can name a lot in West Africa, and that's why it's a great place to do business and why a lot of capital is flowing into it. And the development capital is exceptionally cost effective. I'm not necessarily sure why that is, but pouring concrete, doing earthworks is obviously very simple there, but pouring concrete, erecting steel, putting tanks up, etc. You're looking at like WAF, who's put in a 2.2 million ton per annum plant from the ground up, including engineering, in 16 months. that's unheard of in other places, and we're likely the same. And that includes underground development for them. So try doing that in another part of the world. I just don't see how it's done. And that's why the capital intensity is so much more effective than other parts of the world in terms of mine development. Ours is quite a unique deposit. It is a large oxide overlying a very large lower grade sulfide or low grade sulfide. The oxides are extremely simple. We are quartz barren. It is free dig. We do not have to do any crushing. It goes straight into a large ball mill, of which we grind 20%. We'll use the first couple of years' cash flow from that to build the sulfides. We have a significant, well-defined number of higher grade sulfides, which recently come out with the P17 to the south that you can see there, which was not discovered by us. It was discovered by the artisanals, and we have subsequently drilled it off, and it will be the high-grade starter pit for the sulfides. We did a feasibility study with Lycopodium in 2018 on the oxides, followed up with a sulfide expansion in 2019. You can see the economics, as Richard said, you don't get attracted to West Africa for a 15% IRR. You know, we're looking at 44, obviously at $1,300 gold. So it's extremely robust. Why the banks also love it in that regard, because it's got very, very high margins at the front end. So it pays off its capital extremely fast. We've designed it so that we can develop the sulfides completely independently from the oxides. So the oxide circuit gets up and running. It's built for 5.2 million tons. We run it at that rate for 2 years. In year 2, we build the sulfide circuit. It costs approximately $65 million in year 2. It's totally independent, so the crushing, grinding, leaching is totally independent from the oxide, so it does not interfere with the operation. And if we have the added benefit, if we're doing a SAG mill reline in year 3 or 4, we can ramp the oxides back up again and keep the productivity and the availability very high for this project. Again, this is what the banks love and the lenders love about the project. Pretty simple, free milling. The oxides, obviously, free milling. Average recovery around 90%. Sulfides, average recovery around about 84, 85, at a grind of 75 micron. And this is the after-tax free cash flow. And as you can see, in year 2, based on $1,300 gold, we pay for the expansion of the sulfides with year 2 of cash flow. And obviously we want to backfill, like Richard. We stopped exploration drilling. We did quite a bit in 2017 and 2018. We're putting all of our capital towards the project build, but we've got significant exploration potential to add to the bottom end. The sulfide pits, except for P17, we've only taken them down 90 meters. They are drilled down to 260. But we only have M&I down to 90, so we really are, it's all inferred below that. So we will drill those out and obviously deepen those pits. Something that happened in late 2017 was with the discovery of P17 South. We've been drilling this project as a shear zone. We've got 50 kilometers of drilling in it. It's quite amazing. We had a lot of high-grade hits, but we could never hold them together. Then as we started looking at it, and as the drilling came out of P17, we realized that they were associated with folds. We've been testing that over the past 2 years. We've had very successful drilling there. Our drill results in 2017, 18, and 19 have absolutely confirmed our interpretation. And it's really in the hanging wall. It's not in the in the footwall. It's the main shear zone right along the 13-kilometer zone. But in the hanging wall, there are a number of repeat series folds that significantly increase the grade on the deposit. So as you can see, the main shear zone, this is Siga. Why I love that from a mining engineering point of view, Siga is about well over 1 kilometer in strike extent, almost 2. The average mining width here in that footwall is around about 100 meters wide, and it's the same grade all the way through it. So you're mining oxides at the start here, 100 meters wide with a kilometer strike, down to 30 meters. It's pretty simple mining. But out on the hanging wall, we were a lot of high-grade hits, and the guys were interpreting it as the same shears, and now we know that's not the case. And what really happened was and I'll just go back here into P17 South, as you see it down to the south. We thought it was the same shear. We went down to drill it as the same shear. We kept hitting it, missing it, hitting it, and we figured out that it was a plunging 22-degree fold. A W fold, and grades were multi-gram, generally granodiorite, and pretty good metallurgy, 96% recovery. Then as we started looking back at where the artisanals were, we noticed the pattern of their high-grade shafts and drifts were on a W, and they were following all along in the hanging wall, following along a W pattern. And this would be a typical one, as you can see the classic W shape, and see the grades that they were pulling out of it. And we were missing this. We were drilling it underneath it, etc. So we started looking at it as a 22 plunging fold, and we hit it every time. So we've now got several of those. This is P16 directly north of P17. As you can see, it's the same plunge down at a 22. We had drilled it as a 55 dipping shear. We have decent low grade hits, but once we get into the fold, we could follow it down, and hit after hit was significant multi-grams. And none of this is in the current resource, and it's drilled down to about 80 meters right now. So we've identified about 8 or 9 of those right up along the hanging wall zone, and we will follow those up as we move forward here and get back up into the build and get some cash flow to do more drilling. Up in the north, Maga, we saw the same thing, and as you can see the drill results, this was us testing right in between, drilling 12.5 meter center holes along a 22 dipping folding structure, and again, every time we hit. In fact, the fold nose we hit, I think, 25 meters of 4.5 grams in a block model that's showing a gram in M&I. Oops. Security, I think everybody has to talk about that in regards to Burkina. You know where we are. This is the red zone along the border. We really don't see a lot of activity on the west side, but certainly on the east side, we haven't seen anything nearby us, obviously. Same with Richard in WAF in West African. They're, as I said, our 10-kilometer neighbor beside us. Interesting enough, if you look at an April map and if you look at a December map, you still see exactly the same locations of all of these terrorist attacks or IEDs, etc. They are in areas that you do not go near. Having said that, IAMGOLD and Endeavour continue to operate very successfully in these areas because they do have the right protocols, procedures, etc. in place to do that. We're 85 kilometers from the capital. 2 paved highways, we can go either or to the site. Asphalt on both routes, active military presence on both routes. We have a major army barracks right beside us, so we're well protected. And we're not in an area that's historically seen any of this type of activity. But you still do have to take it into consideration when you're doing and dealing with your workforce. We have a large wrap. We will be wrapping it up in the next 2 months. We're moving about 1,000 people, 3,000 people, building about 1,000 homes. That's almost complete. We use all local guys to build that. We train them as bricklayers, welders, etc. It's gone very well. We had a very large opening ceremony, which very rarely occurs where you have a wrap opening ceremony. And we had the Prime Minister, Minister of Mines, Minister of Environment, etc. there, and 3,000 people attended it. And typical of the houses we are building, and you can see what they are, and we're doing 5 villages at the moment, and we expect to be complete at the end of March and start the moves right after that. So all planned out extremely carefully and all done to World Bank and Equator principles, etc., and IFC standards. Infrastructure, including schools, mosques, churches, clinics, all in place. So it's quite exciting seeing it all happen, and all the local villagers are quite motivated to move. Everybody has signed up 100% to do that. Again, you can't do these without CSR. We have large market gardens. We put in water well systems. We work with NGOs in the area. We've got a chicken farm system going. Spices are very, very valued there. We've got spice growing. We've got land reclamation programs, which we're, I think, extremely pleased with. We started that a year ago. These were fallow lands that we put in these half-moon structures. Everybody's got to have skin in the game with us, so they have to put labor in or something to work with that. And we have grown 25 hectares of maize in an area that has not seen any maize growing for over 10 years because of denuding of the area with tree chopping. So that was a very successful project and very well received. So all of these will be ongoing as part of livelihood restoration and corporate social responsibility programs. And again, we actively work with the locals and NGOs in the area. All of our artisanal miners have been moved off-site and compensated, and we have given them 2 areas to work in. They haven't done that yet because they have to form a cooperative, so we will be helping them with that. So since I came on board as CEO just over 2 years ago, we've changed the development strategy to something that we can do, oxides first, sulfides later, at a plant size that we can finance and build with a pretty robust economics. We've delivered that. We brought in RCF as a very strategic shareholder, including we've also got some other very large institutionals on board as well. We expect to announce our debt package in the next couple of months, so looking forward to doing that. And then we will be going straight into major construction at the end of Q2 this year, with the goal to be in production before the end of 2021. Similar to WAFs, as I said, they have to pour a lot more concrete and stuff to us, but the overall development schedule is pretty similar to what we're doing as we move forward here. That's been our share price performance. We've been a bit affected by some of the noise in Burkina. I suppose noise is maybe a light word for it, but our shareholders have been very supportive throughout this period, and that's been extremely positive for us. So we look forward to getting the re-rating as we move into a development production scenario. Okay, thank you very much.